And thank you, Greg, for the introduction. Move right through this because I know somebody's got to stay on time here. The forward-looking statements that you memorized for Scott, they apply here. Ely Gold transformed from a project developer. We had a project called Mount Hamilton that we developed when I came into the company in 2009. And we sold that asset after developing it into a fully permitted mine in late 2015. And we took the cash that we got from that, about $6 million, and embarked on a royalty strategy. Again, much like EMX, we generate a lot of our royalties organically. And so we offer excellent leverage to the gold market, and also a very excellent exploration leverage. And we'll get to that in a minute. But as a royalty, we pared down management, and we operate on like a royalty company on a very limited overhead. Currently, we have 71 properties now, primarily in Nevada, and all in the western United States. 41 of these properties are currently being explored by majors, mid-tier producers, and a select group of junior explorers. And of those 41, 21 are royalty positions where we've either purchased the royalty or generated the royalty from a property sale or option sale, again, similar to EMX. In our group now, we have over 70 years of experience in the prospecting in Nevada, and we maintain and have accumulated through a few transactions in the last 2 years, one of the largest databases of properties in the western United States. Go into a little bit quickly about our share structure. Again, not too blown up. What I'd point out on here really is just how cheap we are on our stock price. Our market cap about $8.5 million. The stock's ticked up a couple cents, so yeah, these prices are a little out of date. But we have $2.5 million of unrestricted cash. We have about $1.2 million in an equity portfolio of stocks that we've taken from our exploration partners. We have about $500,000 in debt, which was for 2 transactions that we did purchasing royalties and data, and we did those mainly just for tax reasons for the sellers. So we have an enterprise value probably today maybe closer to $6 million, but we think for the assets that we have, we're extremely undervalued. It's stock chart just showing that really the last 3 years in our position now, where we think we're poised to move up again. You can see the volume spaces. We've only in the last 7 years issued shares one time. We issued 10 million shares, and so we have maintained a fairly tight structure. Going to management myself, I have a finance background. Jerry Bachman is our lead geologist. He's got over 30 years of experience and brought with him his database. Scott Kelly is our CFO. Jerry and I actually are the only full-time employees at the company. Scott's a part-time CFO. Steve Kenwood is our qualified person, part-time. And our directors group includes Bill Sheriff, who's another longtime prospector in Nevada. And when we did a deal last year with Bill, we bought his database as well as all his Nevada properties and royalties. So this kind of give you a quick synopsis of exactly how we got where we are in 2 years. We've done a lot of deals. If you look at our news and We don't even, a lot of the deals we don't press release, but we've obviously done a lot of purchases. Jerry's company we bought 2 years ago. When we bought Jerry's company and embarked on this, we got 1 royalty and 5 properties that were optioned. And then last year, we bought Bill's sheriff's properties and database, and we also bought some royalties last year from Wolfpack Gold and their database. So with our leverage to gold, we're a royalty company now that we think is very undervalued based on on the cash flow that we have. We're growing that royalty portfolio through organic option deals, and we also maintain a portfolio of mostly producing companies where we take their stock as opposed to cash. This is just a quick peer comparison. Might be a little hard to read. It's pretty small, but basically we compare ourselves to some of the other smaller royalty companies or emerging royalty companies. And on this list, the average market cap of these companies is $50 million. Again, our enterprise value, this is in US dollars, so we're at about $4 million. As far as number of royalties, the average of these is 20. We have 21 royalties. And of the companies, we have positive cash flow, and only one other comparison companies has positive cash flow. This gives you an idea of that cash flow. It's mostly generated from our option portfolio. We generate the royalties by either selling the property outright, 100% for cash, or we option the property over 4 years on average. So here's what you can see is that most of the deals we did in 16 and 17, so we've built up to where that option portfolio, that's the blue bar, is and together with the stock and royalty income, will generate over $2 million. That's what we have on the books right now for 2018. And the rest of that graph is showing what we have on the books in those existing option contracts going out. And you can see that the contracts kind of balloon out on the 4th year. So one of the reasons we think we're extremely undervalued and due for a re-rating is just as a royalty company, we don't feel like the many investors. We've spent the last 2 years aggressively doing deals and looking for companies that were wanting to purchase or option properties in Nevada. We haven't done many shows like this where we have shown the business model to investors. So we think we're going to be more recognized as a royalty company and re-rated closer to the peers that we have in the group. We're also growing that royalty portfolio very quickly through acquisitions and the option portfolio. So here's where we are today with the leverage spread out throughout Nevada, a couple of in the western states, 21 deeded royalties, 21 option properties, and 30 properties available for option or sale. We have very strong partners in these and generate most of these properties through staking and purchases and ideas that are generated out of our database. One of the other things we're very good at doing is consolidating properties. One of the reasons that I think we've been so successful is we've put some districts together that through claim fragmentation have not seen any modern exploration. And the mid-tiers, the majors, they don't want to go in and do this claim consolidation. So we've been very good at doing that. And there's an example here of 4 districts, the Mina Gold, Gold Bar, Weepaw, and Tonopah districts, where we've put together packages of patented and unpatented claims and bought in royalties that haven't seen exploration in this cycle. Here's an idea of our partners. Gold Resource Corp has 3 of our projects. That's out of their 5 in their Nevada mining unit. Barrick Core Mining just optioned the Tonopah district that we put together. Hochschild Mining has 3 projects, the big Peruvian producer. Fiore, which is the company that's bought all of Midway's assets out of bankruptcy. We have a royalty on their Gold Bar property and also on some other option on another property. Allegiant is the spinoff from, just was spun off of from Columbus Gold, Waterton Global, Fremont, and Colorado Resources, and VR Resources. This gives you just an idea of the kind of transactions that go into one of our consolidation stories. The Mina Gold, we purchased 4 royalties and bought in, traded for some patented claims, staked some more claims, organized the data room, purchased an existing royalty, and then sold that to Gold Resource for $1 million cash and retained a 2 to 3% royalty. I'm going to just skip through these because they just go into a little bit more detail about the royalties and the option portfolio that I've talked about. You know, we don't, these option contracts are for 100%. We don't do joint ventures. If we did, we couldn't possibly do the number of deals that we do and then manage it. So once we option a property, pretty much we get a report and news releases from our partner, but other than that, all we do is send them the invoice for our payments. So just wrapping up, Waiili Gold Royalties, we're highly leveraged to the price of gold. We have excellent leverage to Nevada exploration, 41 properties currently being explored. We're undervalued to our peers, and we're generating cash flow, which in the past and in the future means we'll have minimum dilution to shareholders. So we're extremely cheap. You should buy our stock.